Knowing how to drive a truck takes time and effort, but an often forgotten part of trucking are the rules, paperwork, and taxes involved to stay compliant in the industry. There's a lot to learn out here in the trucking world, like fuel taxes. Did you know you have to pay a tax for every state you travel in? Sounds complicated, so I'm going to let Charles tell you more about it.
Hi, I'm Charles, and I'm here to talk about your International Fuel Tax Agreement return, or IFTA. Your IFTA filing and heavy vehicle use taxes will need to be paid in order for you to apply to renew your International Registration Plan, or IRP. IFTA is filed on a quarterly basis every year, which means you will have to file IFTA 4 times within a year. Let's start looking at the IFTA basics. What is IFTA? Before IFTA was in place, filing state fuel taxes was a headache for truckers and for the government. With IFTA in place, the fuel tax system was streamlined to work better for everyone. Who is required to file an IFTA quarterly tax return? Any qualified motor vehicle that travels between 2 or more member jurisdictions are required by law to have an IFTA license and decals on their vehicles issued to them by their base jurisdiction. IFTA member jurisdictions include the 48 contiguous United States, as well as the 10 participating Canadian provinces. Your IFTA quarterly tax return must be filed in the member jurisdiction in which your IFTA license was assigned. Your vehicle is considered a qualified motor vehicle if it is designed, maintained, and used to transport people or property. It could also have the following characteristics: have 2 or more axles and a gross vehicle weight that exceeds 26,000 pounds, or has 2 axles and a registered weight that exceeds 26,000 pounds, or has 3 or more axles and a combined vehicle weight that exceeds 26,000 pounds. On the other hand, the only vehicles exempt from reporting IFTA are recreational vehicles. Your base jurisdiction is the member jurisdiction or state where your qualified motor vehicle is registered, operational control and records of the licensee's qualified motor vehicle is maintained and available for auditing purposes, and some mileage is accrued by qualified motor vehicles within a fleet of vehicles that travel through that jurisdiction. When are IFTA returns due? Your IFTA return is due the last day of the month following the end of the quarter you're filing for. Since IFTA is filed on a quarterly basis, there are at least 4 dates for you to remember. These are Quarter 1, January through March, with a due date of April 30th. Quarter 2, April through June, with a due date of July 30th. Quarter 3 of July through September, with a due date of October 31st. And Quarter 4 of October through December, with a due date of January 31st. If the deadline falls on a weekend or a federal holiday, the deadline will be moved to the next business day. Does each state have different requirements for IFTA? Yes. Since the IFTA quarterly tax is a state tax, each state has different requirements and guidelines for that tax. You can find many resources online that will give you IFTA details state by state. What is the penalty for filing my IFTA quarterly return late? Well, for most states, the penalty for late filing is a flat fee of $50, or 10% of the taxes due, whichever is greater. The only state that is different is Nevada. Nevada's penalty for late filing is a $50 flat fee plus 10% of the taxes due. How should I file my IFTA return? Well, we suggest you find a reputable and trusted tax filing provider like ExpressIFTA to help generate your IFTA report with ease. With live local customer support provided by our e-filing experts in Rock Hill, South Carolina, you won't have any unanswered questions about your IFTA return.